So that is lesson 3.1 covered. We're going to be moving on to 3.2 now. We've studied fundamentals. We've understood a little bit about where we're going, what we can do, how we can break it down. We now need to combine this with our technical analysis. Now, this is going to be the basics before we move into more advanced strategy. We're covering charting basics like, candlestick formations, trend lines, support, resistance, supply, demand, all of these things that are kind of subconsciously in your mind that you need to comprise with other forms of confluence, your whole numbers, your structural levels, your lower time frame breaks, all of this kind of stuff. And then we're going to move into some indicators, your MACDs, your moving averages, all that kind of stuff. And then we're going to introduce chart patterns. Now, we never trade these alone, but these are always going to be things that crop up that you're going to see amongst the charts. And you need to know what you can comprise and build upon that to make an informed trading decision. Things like risk management, things like risk to reward, things like trading sessions, market volume, economic data points, okay? These are all things and considerations that you're going to start building. Eventually, it's like driving a car. You're really focusing about indicating and changing gear and slowing down and pushing down your clutch. It's really quite intense when you're learning, but it's the same with trading. You've got all of these things to think about, but all of a sudden it will become second nature. You're doing these things without even marking things up on the charts. You'll understand it by eye, and that's eventually where we want to be. So enjoy this lesson, and then we'll move on to the next one.